Morning all. Going to follow a similar theme to Travis, looking at, I guess, a global context to start with, but then driving into more of where the private money sector goes. So some of those references that Travis made at the end. So as he found, 10 minutes isn't a lot of time, so please forgive me in advance for some rather massive generalisations that I'll need to make. And some of the numbers we talk about are also going to be pretty general just to try and get through. Chatham, to give some context, we're a private firm that do a couple of things. One is help companies with their what we call growth advisory. So companies that are looking to get a new product to market, acquisitions, investments in the private sectors, commercialising products, etc. And then we do the investment facilitation, and that's about finding often private money, whether it's family money out of family offices, so wealthy individual families, private equity firms, some corporate money, venture capital. So we help people who need money to get their business, their product moving. We connect them to those investment groups. We operate primarily around Australia, Southeast Asia, and into Europe. In terms of the context of, I guess, why is an agri startup business or an emerging business of interest for a pretty diverse group like this, we see and have, I guess, the privilege of having lots of conversations with individuals and companies that have great ideas, fascinating ideas, and often they don't know how to get them out to market. So for those in the room who are consultants of various sorts, business owners, executives, and are struggling to figure out how to commercialise, how to add value, how to create value, they're the conversations we have on a regular basis. And it's surprising how many times we've seen a company or an idea that's sort of really quite obvious and someone's been sitting on it for a while and they don't know how to turn it into, I guess, a money-making venture. That's what we help. So I'd suggest as we go through that we're looking for people to be thinking about opportunities that maybe are right there in front of them. And then if one of the challenges is where does the money come from, there might be something here that helps you take that next step. So talking about food in an agri sense as an example, which is where I guess investor interest comes from. So at a very macro level, investors go looking for opportunities in sectors, and those sectors are often where can you see, as Travis said, a 5-year, 7-year, 10 or 15-year opportunity. And sometimes it starts with groups like the UN, and the UN have their different policies, and these policies flow through to the governments, and governments flow through into Australia and so forth. Just as an example, one of the major priorities for the UN is around food security, and the reason for that is by 2030, estimates of, down the bottom at the back there, it's about 8.5 billion people that need to be clothed and fed every year. It's closer to 7 billion now. So we think about an extra billion people that need food, clothing, shelter, all the things that go with that. And as Travis said, a lot of land around the country in Australia and globally, isn't good for farming, isn't good for producing from. But an extra billion people have to live somewhere. And they often live in places where 20 years ago, we were growing something. So we get less land, more people. From an economic point of view and an investment point of view, what that does is create a lot of demand and interest for things like food. So we know there's going to be food issues because there are more people and there's less land to grow it on. So from an investment point of view, that brings investment interest because we're going to have to find new ways of doing things, new technologies, new techniques, and the people who solve those issues will be in high demand. And that's what private investors often go looking for. We look at these stats, we can argue the stat, but 15 years away, there'll be over 1 billion people forecasts who are going to be struggling to get a meal. Not 3 meals a day, but 1 meal a day. It's a really large number. And so at a global scale, governments get interested in that, which drives the policies, which brings the money. Estimates of 1/3 of all food that's grown and then bought is wasted or lost through floods, droughts, hailstorms, whatever it might be, pests, etc. But then I'm sure some of you may be like our house, you buy something and you find it in the back of the fridge 2 weeks later, hasn't been eaten, right? Or it gets cooked and someone eats half of it and you throw it in the bin. Those sort of issues and the challenges around how to get more food on the table in more places, especially in third world countries, bring a lot of interest, and how to do that quickly, cheaply, more efficiently. So investors go looking for these opportunities. And it doesn't matter whether it's drones. We talk a lot about technology now and drones and the robots that Travis spoke about before, vertical farms, better technology around bugs, around chemicals, etc. There's a whole range of different areas that really smart men and women are working on. That's what investors go looking for. Because if you can solve that issue in Australia, often that same technology can be used in America or Canada or somewhere else. So these same conversations are taking place around the world because this issue is a global issue. And the interesting thing, I think, from an investment point of view, and what investors look for is that scalability. So if you can solve something for an Australian product or crop, potentially you can solve that on a global scale. So investors think, well, if it's a market here of 5% compared to globally, then you can take that same product, same service, and you've got a market internationally without having to spend more money necessarily developing it. So investors go actively seeking those opportunities. The trick is which ones actually will work, right? And how do you figure out what works? How do you figure out what will make money? And that's what the investors spend their time looking for, and part of what we spend our time looking for as well. The other big thing that's changing investment markets is consumer awareness, consumer demand. And we see that a lot more, and it's been on the news earlier this week, I think, with the vegans out in the middle of Melbourne and out on the farms. Right? So technology is allowing people to get their message out there and to create their own noise, where 10 years ago, without phones in your hand, you didn't know necessarily what was going on. So the social agendas can change, and that changes investment interest as well. But it also changes people's awareness of what's happening out on farms and in other places. We had a conversation with a group last week who have developed the technology. It's still early days, but the technology that's going to allow you in, say, 12 months when they get it to market, to walk into a supermarket with an app off your phone, go to, in this case, talk about eggs. Eggs might be coming off Kangaroo Island. So using both a blockchain technology to allow you off your phone to go, those eggs came off this farm 24 hours ago, and I can see the process that went through from that farm through to this supermarket. Right? So ship, train, bus, truck, whatever it was, how long, how quick was it? Now, Kangaroo Island to Adelaide isn't a long way. If you think about shipping produce from Australia to China, it becomes more interesting of how fresh that food is and where it's come from. So that's one piece of technology that they're working on. The second piece, which makes it much more interesting from a consumer point of view, is on top of that, they've got the augmented reality applications that you will then be able to see, literally, in this case, the paddock that these free-range hens were eating from, and the facilities where the hens laid, and the truck. So if you think from a brand point of view, are you going to go, if you use that technology, you might want the cheap eggs, that's fine. You might want to know that the eggs you're paying a premium for because they're free range are actually free range. They were laid 2 days ago and they went through a process that's quite clean. Investors love that sort of thing. One, because it's appealing to the changing consumer demand and interest about, I guess, ethically grown food and so forth. But also that technology can work anywhere. You can almost put it in any application where you've got a supply chain and you've got product that you normally wouldn't be able to see where it came from. And you can do it in Australia or America or wherever it might be. So there's a number of people working on really smart, clever applications like that. Those businesses don't get money from superannuation funds because they're starting at this scale. So that starts with investors who are often private investors thinking, what can I put money in that's really different and quite unique? And that's what we see quite a lot of. So I'll focus more on this. So the industry trade groups like, you all know, I'm sure, the Kraft group out of America, they're putting money into accelerators. And accelerators are, we talk in Adelaide especially about groups like Lot 14, which is a government group on North Terrace, and Think Lab, which is the Adelaide University group. So these are groups you could call accelerators. And it's where individuals or small companies come together and they work on technology and applications, and they can do so with often some support sitting around them. Kraft Heinz, as just one example, and there's dozens of these now from corporates, are funding their own accelerator. So they have a room like this in an environment in a similar way. They've got 4 different themes that they're putting money into startup companies. And what they do in exchange is say, we want to either own the equity or own the company. So they have this relationship in there. But they're funding companies who are working on food and beverage applications, because Kraft know that they can't do all this themselves. So what do? They go and fund individuals or small companies who are trying to do it. And it's much better for them to risk money on 40 or 50 or 100 different people working on things, looking for those 1 or 2 that might work. So we're seeing a lot more money coming from corporates, not into the direct company once it's established, but trying to get back to the idea when it literally still is an idea. That's happening a lot more now. Once companies are up and running, super funds start to get more interested, but this is companies that are worth $20, $30, $40 million, so it's a different level. But government's putting more money in as well. So Lot 14, government funded. Why is it all happening? Because in 2030, there's an extra billion people that need food. And that's what drives a lot of this. It's as simple as that. The private money, so this is the family office and high net worth individuals, they understand the same thing. Right? So you've got this long-term demand, well more than 7 years, because in 2030, there are 8.5 billion people. By 2040, I'm not sure what the number is, it's probably 10 billion. So this issue keeps on going. So this food issue, food security, and all the services that go with that have this long-term demand, and people have to solve it. That brings the money in. Trevor spoke a little bit about what investors want. Private investors look for and have a different risk appetite. They definitely want growth. And this is not growth of not to make 2 or 3 or 4 times their money. They're looking for 8, 10, 12, 15 times their money, which is why they go looking for industries where there's a long-term interest, because you know that demand is going to be there for a long time. Often they want alignment between what their company does and what other companies are doing. So you can make sure that alignment is there. The return on investment, really they want scarcity. You don't want to invest in something if there's 50 other people doing exactly the same thing. So you're trying to look for that little bit of gold where other companies aren't necessarily acting. And what do they give you? Basically traction, right? So if you get money from someone, it means you can do things more quickly. You can test your product more quickly. You can get to market more quickly. Now, in exchange, you give them equity in a company. Right? So people who are looking for money from outside investors have to give something up. You normally give up equity. So it is that really important decision for people to make is, do I want to own 100% of a company that might be worth $100,000? Or do you want to own 20% of a company that could be worth $10 million? And that's the bottom line for this exchange. You take your idea, people want to give you equity because they want a return. You've got to give up something to get that money coming in. Quite different to going to a bank. It's a very different situation. So that's the bottom line for a lot of companies or people making a product or service, is how much do you want to give up to try and get your product to market more quickly? So I'll wrap up from depending on who you are sitting in the room, for those who are advisors, I think the question is there, how can you necessarily add value to your clients by helping them realise what they've got in their business already might be really more valuable if they had other investors helping them get to market. So do you give something up? Do you allow it to go to market maybe outside of your existing structure? And if so, how do you make that happen? From a business owner's or an executive's point of view, it's the same thing. Often you're sitting on technology, sitting on a product or service in your market. It might actually be more powerful and more appealing if it's sitting externally. It's hard to realise value sometimes if it's in a company structure, but if you can separate it out, you might find that the market no longer is South Australia or your clients. You might find you're sitting on something which could be used across Australia, across Europe, across America, wherever it might be. So it will encourage everyone to walk away from today as you hear ideas, is thinking about where are the opportunities, because there certainly is a lot of money both in Australia and overseas looking for a home, because we've got this long-term issue around needing to be more effective and efficient in both our food and our fibre areas. So thank you.